What up, patrons? I don't want to call you patrons. I mean, that's what people are when they come into a coffee shop. They're a patron, but I want to call you guys my coffee shop crew. How about that? You guys are my coffee shop crew. I don't want to call you patrons because this isn't Patreon or whatever. You know, you guys are not paying for this service that I'm giving to you. Now, that being said, I want to thank everybody who gave me a surprise when I came back. I recorded a video a little while ago, a couple hours ago, and went out to my appointment, came back, and lo and behold, I was like, hey, let me see what's going on. Let's type in the Heiken Ashi Algo. Heiken Ashi Algo oscillator, right? It's been listed. And I can see that you guys already boosted it 11 times. So at least 11 of you have it added to your chart, I'm hoping. So thank you for that. Thanks for the messages. And let me cover 3 people sent me a message already. And that's a lot of people in such a short period of time. 3 people sent me a message and they want to know what is going on here. They saw this in my last video and they want to know what all of this is. These messages here, buy positions like banks, liquidity traps, and stuff like that. So let me just discuss that with you really quickly. The algo oscillator is doing something really, really incredible. It was not designed to do this, but the calculations are allowing it to do this. And if you study price action enough, you will understand that this is what happens in range markets and liquidity traps, okay, bull traps, bear traps, and stuff like that. And I want you to see this, okay? Each one of these price markers that I'm selecting right here, these are just markers of where price was at certain points. You don't necessarily need to know that. But what's important is the message that's related to it here, the message that's related to here and here, okay? And the fact that you see I have this range set up here because I got a range signal down here on the oscillator. Don't forget your range signals are here. It tells you when you're in range. I just didn't adjust mine, but it's okay because we fell into a range again. Price fell down into that range. No big deal, right? Now, let me get rid of these support and resistance lines. They're a little distracting right now. Let's clean this up. Let's get this video ready there. So also, do I need to get rid of the moving averages? I'll keep them for now. So again, this is the mass effect moving average, but all I'm using here right now, oh, look at that, my trend thing came on. How cute. Let me shut this off. You don't need that right now. Yep, there is a trend ribbon that tells you when trend is going one way or the other. How you like that? Huh? There. Trend is down. Trend is up. Okay. There you go. We'll get into that into another video when the mass effect moving average is ready to go. So here we are. You can see that price came down out of another range. The moving averages crossed over, so you are clearly in a downtrend, right? So what happens when you end up in a ranging market is the banks, financial institutions, these big money algo machines, they are scooping up liquidity. They're scooping up they're stopping people out. They're stopping out them high, they're stopping them out low, okay? They're really just stopping people out just left and right, scooping up their liquidity so that they can push the price into the direction that they want to push it to. And in this case, they wanted to push it even lower. So they're trying to drive the price down for one reason or another, right? So you know you're in a downtrend. Now, let's get into what's going on here. Now, obviously, the algo said at this point that you need to make a sell, okay? It says sell here. And if you'll notice that is a test as soon as you tested off the 50. This is a really, really fast indication because usually what you want to see is a test off the 50 here when you're already in a downtrend. But there is so much volume driving to the downside and so much volume lost from the upside that the algo actually picks up that you need to start your sell here. So you enter a short position. I'm just walking through what's happening on my screen. I'm just walking through it, right? So at the close of that candle, you enter a sell position. You go to your swing high and you leave it right there, right? Where do you get out? Okay, let's put all our cards on the table and let's just assume we can get out somewhere at the range, right? Some people would just get out at the range and they'd be out. But what if you didn't? What if you just wanted to wait for the algo to tell you when to get out? Now, this is range trading, just like the banks and institutions do. They scoop up price points all along the way, all along the way, all along the way, until they drive price the other way, because they've driven the price down so far that it makes sense for them to start boosting it up again. Now, here's your swing high, right? This is going to be your stop loss way up here. I'm in a short trade. I entered here at, I don't know, 50 cents and 50.6 cents, okay? And I'm going to wait for the algo to tell me to get out of this short trade, which would be here. See, short exit. You enter the short, and it tells you enter the short here, and it tells you to get out here. What is it doing along the way? This is what the banks and institutions are doing along the way. They drove the price down. It tests off the 50. They drove it down some more, give it a lot of volume right here. Okay, this is just a colossal move down, right? Most people would get out when it gets to the range, but there's still more to get. So they get out, and then all of a sudden, you see that here you get another sell position, right? It says sell. You can sell because why? Your 50 is below your 200. In other words, your fast moving average is below your slow moving average. So you can add more position. Sounds like a bank, right? Like an algo machine. Okay, so you add more short sale here, okay? And then you get here. You add more short sell, okay? You're shorting the market. You're pushing it down. You're helping to push it down. Then here, you add more short sale. You've added position, added position, added position, and you had your starting position way up here, okay? You have now sold in 1, 2, 3, 4 positions. And which one is the lowest? Let me see. Low, 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 low. So like this is the lowest, this is the lowest. This one is the lowest, it looks like. Unless I'm wrong, correct me if I'm wrong, whatever you want to do. It looks like this is the lowest position that you sold at so far, right there. Okay, I keep doing these backwards. So here, right there is your lowest position. Nope, this is your lowest position right here. So that's the lowest you sold at. You started selling at 50.6 and you did your final sale at 45.7. Okay, so another 5 cents cheaper. What's happening? The bulls come in and they start pushing up, but of course you meet resistance, which means the banks are stronger than you. You're only testing off the 200. Remember all those positions you picked up down here, you've got really, really, really cheap coin, right? You are short selling. And then all of a sudden you get another sell right here. Here's another one. You sell right there. And where do you go after that? You keep going until it says get out, way down here. So you picked up all these positions, right? Picked up all these positions. Let me put this one here at the short exit. You're going to exit right here at the top of this candle. Okay, right there. This is what banks do. And I'm going to take this one off because I'm going to change it. And let's see, your initial sell position was right here at the close of that candle, right? Okay, so let's go over there. Go right here. I need to move this to the swing high, right there. And move this to the close of this candle, right there. Here's the swing high. And this is a 1 to 4.8 risk reward, right? And if you got out at this position, you would have just left all this crazy, crazy ranging that takes place. And there's actually something else that takes place here, right? So you ended up picking up this 1 to 4.8 ratio. You ended up gaining 12.43%. And you would have gotten that by simply setting your alerts. Set your alert, okay? Sell, sell, sell. If you know that this is going to go into a downtrend for a while, go and create an alert. You want to create an alert for Heiken Ashi Algo, and you want to find your sell signal, and then just hit create. That's it. Sell signal alert has been triggered. Please review your market. It may be time to go short. If you're already going short, you want to add to your positions. You can add. I need to remind you that just because you get a buy signal doesn't mean you need to get rid of your sell signal. They do not cancel each other out. That's not what they're for. Okay? Sell is only for people who want to be going short. Buy is only for people who want to be going long. That's what that's for. Okay? Now, this message down here says, let me get rid of this so you can read it. This message down here says, and I quote, this bank style trading multi-point 16% set of positions is a killer. And I'm talking about this, all of this. You entered into all of this from way up there. Okay, you started way up there and you entered position, and then got out of your position at super low. Not only did you hit the range, you went back up to the 200 and you closed out below the range. Now, let's move on. What happened here? Again, look at the algo. It says buy. It says buy right here. Buy and go where? Where do you go to? You go to your 200. That's it. That's literally it. Go to your support or resistance level, go to the end of the channel, or go to the next strong line that you have. You go to this 200 and you will catch this. This will catch you way over here. Now, obviously, you don't want to be buying in a downtrend, right? Your 200, your slow moving average, is above your fast moving average. So you do not take this buy signal. Why? There's two things that tell you don't do it. Why would you take a buy signal? At the same place you got resistance. Price went up and you got resistance right there. So what are you doing? Why are you buying? You're not supposed to. But you should be looking at what's happening next. Accumulating shorts at two positions only to be saved by the smart money machines. Now you are trading like banks, okay? Here it says sell. Here it says sell. I didn't say get out anywhere. I didn't say set your stop loss or whatever. You sold here. You went short here. Sorry, here. You went, oh yeah, at these two positions, right? And where do you set your take profit? So you sold here, okay? And you sold here. But your take profit is the swing low. See that pivot right there? I'm going to set the pivot right there. Okay? And where do you set your stop loss? You can set it at the end of the channel. You can set it at the 200, set it at the swing high. Go for the swing high. It's usually best. I usually like to go for the bottom of the triangle on that swing high. And you'll notice the bottom of the triangle is above this. This probably came out first and this pin came out afterwards. But that pin that came out is the smart money machine that actually saved you. You picked up just a little bit more right here. It's a small amount, but you picked it up and it hit your take profit. It never hit your stop loss, okay? Let's take that one out. Trading like the banks. Now let's get into another sell position. Sell, swing high. Where's your swing high, right? I'm going for that triangle again. Way over here. Swing high. Where's your new take profit? Well, your new take profit is way down here. So just pull back a little bit. You always pull back away from your, if you ever have to look left for a take profit, pull back a little bit. And look what happens. You sold here, you scooped up more liquidity, the same thing that the bank is doing. And then a couple of candles later, look down, you get support. What does that tell you? Okay, support here. I'm drawing a support line right there. Before support, I have resistance. Okay, resistance at the close. Support here, right here. Draw a line straight through it. What happens? What's going on here? Price is leading away from your support line and your trend line. You're now back in a trend, going back up over the 200 until you get another buy signal that carries you to the other end of the channel or your swing high. Just follow what this says. You need to listen to what it's telling you, okay? Sell, 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 because you're in a downtrend. but you have to look left for your swing lows. You have to look left for your support and resistance, right? Draw your trend lines from one to the other and draw a line straight through and watch what happens. Practice this. Don't try and do this in live trades. Set up your paper trading, set up the demo account, and start following these rules, okay? All right, that's it. Another final trap by the smart money machine, a final shorting liquidity grab, but your last take profit has now turned into a new swing low. While you were in these trades, okay, you went in here and you went in here for a short, right? And if you remember, your take profit was like right here. This created a new low for you going forward. So when it told you to sell here, your take profit was down here somewhere, created by this new low. This low was created by the smart money machines that came and scooped up people's liquidity. What were they doing? What were they doing? People saw this candle paint majority over the channel and over the 50. So they would have gotten in for a long trade. They were tricked. People got tricked. This doesn't say buy, and you don't buy against the trend, right? You look at your moving averages. Where's your swing low? Your swing low is look left, okay? Without looking at the indication, people would have seen this candle and said, oh, I'm going to buy. I'm going to go to the other end of the channel. Great. I'm going to leave my profits on the table, and I'm going to go, I don't know, 1 to 1.5, like people keep saying online, 1 to 1.5. Here it is, okay? They never reached their take profit. They went above the 200. They went to their swing low, and the next candle just came out and said, bink, get out. Get out of the market. I'm taking your money. And they did. But that trick that you didn't fall for, okay, became your new swing low when you entered here. You entered here. There we go. You entered here. Come on, stop that. You entered here, and your swing low was down here, and it got picked up. And you made some last. That's it. Then you get support. Then you get a buy signal. You go to the next end, right? And then you get resistance, right? So you draw a line from support to resistance, and you wait for the trend to break. That's it. It's very simple. So I'm going to do a step-by-step video eventually. I'm just going to walk you through step by step and show you. Now, I want to show you something. Every single one of these risk rewards that I have plotted here, every single one of them is a profitable trade. Every single one of them. And they were all using the buy, sell, support, and resistance and trend line breaks from the Heiken Ashi Algo. All of this, it's ridiculous. Okay, 3, 1, 8, 2, 3.7. You're already looking at about 12%. No, more than that. You're looking at 20-something percent. Here's 11%. Okay, 4%. It's a lot going on here. Every single one of these trades, I just backtest this over and over again. Every one of them was a profitable trade. I'm not saying it is the key. I'm not saying it is the golden goose. I'm not saying that. What I'm saying is this will help you understand price action. You have to watch what it's telling you and look at your chart. Put 2 moving averages on there. And if you can't use 2 moving averages, use one really good one that's telling you whether you're in a downtrend or if you're in an uptrend. Are you going to sell in an uptrend? No. Are you going to sell in an uptrend? No. Are you going to buy in an uptrend? Yes, I'm going to buy. And this is the Mass Effect moving average. You buy here, where? You would have bought here, and you would have gone all the way to where it says long exit. You have gotten out here, and then price starts moving down. So Mass Effect moving average is the next one to come. Enjoy this show, everybody. Have a cup of coffee and a cup of tea on me. Peace out.